Good afternoon, this is Mark Espy. It's Friday the 21st of May and we're looking at the Dow Jones Industrial Average. Before we begin, I must remind everybody that everything we speak of today is for educational purposes only, never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. Well, just to recap, we came out of the channel a couple weeks ago and broke down decisively below the low of the channel and continued down, and then we had the flash crash day on May 6th. Then we recovered, came back up, tested really this shelf or pretty much the beginning of the breakdown out of the channel, and then proceeded to come back down again. And today we put in, one could describe this as a bullish harami, a quasi type of a hammer, certainly not classic in any way, shape, or form, but the message is that it rejected lower price levels at one point during the day. This was all the way down to, let's see, I believe the low today was 99.18 today. And then it recovered very nicely, in fact, in the last half hour of the day, and drove up very nicely. It almost became a piercing line type of a pattern, but it would have needed to close at least halfway up this prior day's candle. It significantly it broke the 200-day moving average, which is that's quite significant. And I would have liked to see this power up and then recover up above the 200, but the move today was on good volume. 438 million shares were traded today on the Dow Jones Industrial Average. So the move was credible. Not surprisingly, though, what happened here, if you look at the Bollinger Band, this is the green line that you see right here, the lower band of the Bollinger Band, and yesterday's move broke down. It was an ugly day yesterday on Thursday, and broke down and closed at the very low outside of the Bollinger Band. And when you see that, typically the index will begin to trade sideways and come back inside of the band. The bands will typically encompass about 95% of the trading action that you see. So when you see a move that is that large and that quick to pull it outside of the bands, it usually will begin to trade back inside the bands, and that's what it did today. Interesting to note here, in the last 19 days, we've actually had 14 sessions that have had triple-digit trading, 100 points or better. And 9 of those 14 triple-digit days were down days. So quite bearish. Don't need to tell you that. It's been pretty ugly. But as ugly as it seems, and as much as people are talking about bear market now, this really has stayed within the confines of what we would consider to be a correction, which is typically defined about 10%. Right now, closing today at 10,193, we are 9.5% off of the high on April 26th. So really this was just a sort of a run-of-the-mill garden variety type of a correction. And as I've said many times before, bear markets, or actually corrections in this situation, go down like elevators, and then we go up bullishly like an escalator, which is what we see here. Again, here's another elevator down. We had a couple elevators down. We had a little come back and forth here, but is this over? Is a question that a lot of people ask me, and hard to say right now. But I do feel that we are trading in this very, very wide channel, which is about 1,000 points. And until the market decides that it wants to begin to narrow this channel, then we have to recognize that it is trading within this range. I was somewhat surprised that the flash crash low that was put in on the 6th was recognized as the low of this channel. I felt that it was going to be the day following, because I felt this was a fundamental event, or actually a mistake, and we still haven't really found out what really caused it. But interesting as it may be, it ends up that this needs to be respected down here. I would like to see us come up above the 200-day simple moving average to confirm my feeling that this is that we're moving back up into the range here. In terms of support levels, we have this channel that was put in back here that I've pointed out many times in the past in December, actually November, December. We have the swing high here at 10,700. We also have this low that was put in in February, and that was actually at 98.35, and that is an area that was almost hit by this flash crash low. And we have the top of the channel right here, which is just at the breakout point when we broke out of this channel, this prior channel right here. The MACD is continuing to be bearish, as is the stochastics. So I think we just watch this and let it trade in this channel. I think I would be very much surprised if it were to break below the February 8th low. But I've been surprised this week on some of the action, so we just need to watch it and be diligent and nimble. So with that, we're going to move over and take a look at the SPX.